Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I am the Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know that we don't just talk about stocks, we talk about how to profit from company earnings. This upcoming week is yet another heavy week of large cap earnings and key economic data that could drive volatility and directional bias. But we're going to focus on earnings, and notable corporations or companies that have results this week include Coca-Cola, McDonald's, Cisco, Lyft, Airbnb, Applied Materials, Pinterest, and Advanced Auto Parts. Those are just a few of the names we'll be touching on today. It's a big week, so sit back, relax, and we will get started here right now. So as we go through our list each week, realize that, keep in mind, this is not a comprehensive list of all the companies that have earnings. We have, in fact, this week, there's 500 companies declaring earnings. We've whittled our list down to about 76, of which I've whittled it down even more to highlight a few here that as of the time that I put this together, these were the best candidates. Now, the list does change every now and then because of implied volatility changes, time changes, everything. So there may be a name or two that is not here that you might want to see that has earnings this week, but it wasn't necessarily the best candidate. And what are the best candidates? Well, as you see on our list here, we break it out into two components. On the left-hand side of the list here, we have companies that are the best breakout candidates. These are companies that expect double-digit moves from their earnings results, meaning the stock will move 10% or more, either up or down. We don't know what direction. So we like to do straddles and strangles around these stocks. Now, the stocks on the right-hand side of the ledger, these are quiet stocks. These are stocks that just don't move very much. They move less than 10%. They usually move single digits of 9% or less. And we like to sell premium around the earnings event because of that increase in implied volatility that hits the options. We like to sell that high implied volatility and benefit from the lack of stock movement and the drop in implied volatility. Okay, so let's start off with the quiet list, and let me give you an example. We're going to start with the quiet candidates, and specifically, this is Pfizer. Now, Pfizer had earnings last week, but I like showing Pfizer because this is just a really quiet stock. In fact, Pfizer here has an average move of less than 4% over the past 6 earnings cycles. In fact, it goes back even longer than that. I updated this chart, in fact, through today. Pfizer this morning was down 75 basis points, down 20 cents, and you can see currently, or at the time of our meeting here, it's at 2702. But earnings last week, you can see the stock actually dropped and then rallied off the lows and finally closed around 3%. So it moved less than the estimated move. This is what we like from quiet stocks. They just don't move very much. All right. So let's take a look at our list for this week. And you'll notice a lot of familiar names here. We have Coca-Cola and Marriott, McDonald, Cisco, Airbnb, just to name a few. And a unique characteristic of these stocks are usually $50 in price or larger. Okay, up to about $300, sometimes up to $500. It depends on how the options chain issue, or how the option market makers issue strikes. Okay, usually between $50 and $300. Occasionally, we do go over that, up to about $500 stocks in our list. Okay, so let's jump in, and I'll give you an example here. Our first stock here is Apollo Global Management. Now, they had earnings this morning. All right, so they declared here Monday, February 9th, before market open. And the average move here is 4%. And take a look at this. You can see the stock is up higher by only 1.3%. Now, it was up a little higher. There is a little bit of a wick there that's hidden by my dotted line. You can see the performance of today. Okay, so but But what we're concerned about are closes. We're not concerned about where the open is or where the high is or where the low is. We're concerned about the close. And right now, the stock's just up 1.3%. Great stock to have traded with selling premium. And again, we do that through a strategy called an Iron Condor. Great stock to trade. Very nice move there for Apollo Global Management, or lack of move. All right. Moving on to Tuesday. Tomorrow morning, we have Coca-Cola. They will declare tomorrow, Tuesday, February 10th, before market open. The average move here is 3%. Now you can see here that Coca-Cola has had a nice move going from, let's just go month to month. So the beginning of January here, it was trading, around $69. And then here at the beginning of February, it was up at, where were we up? $75. Okay. So this stock is moving around a little bit, but we're not concerned about historical moves outside of what is around earnings. Okay. And you can see a little bit of a gap here. This move was about 3.5%, a little over 3% on that gap. So right in line with what market makers were predicting. And we do expect that. Now, this is the $77 stock and a good example of where we like to be in that range of $50 and higher. Okay. Now, moving on to Marriott. Marriott's a $300 stock, and they're going to have earnings tomorrow morning as well. Tomorrow, Tuesday, February 10th, before market open. The average move here for Marriott is just 5%. You can see the nice little move that it had last earnings cycle, but again, between these 2 days, it barely made a 5% move between those 2 days, and we expect that. Well, that's what market makers are expecting again for this earnings cycle. Just a nice, it can move up by 5% or down by 5%. That's where that's what the market makers are pricing into the options. So what we like to do is place the break evens of our trade well above and below that 5% number. Okay. So we like to go, in this case, I would love to go 9 or 10% out of the money to sell my options above. Same thing down below, give myself a little wiggle room. And again, it's an Iron Condor. We never sell options naked. Okay. And we would go from there. Another $300 stock is McDonald's. They will declare Wednesday, February 11th, before market open. You can see here every now and then, you get a little data issue where your earnings, this happens on all charts, okay, where the data provider isn't really sure where the earnings is, but I have confirmed that the earnings are Wednesday, February 11th, before market open for McDonald's. The average move here is just 4%. Okay. Now, the great thing about a $300 stock is you usually have lots of options to choose from. They are usually higher priced just because of the expense of the stock. Great opportunity here to sell premium around the upcoming earnings event. And that will happen for McDonald's on Wednesday morning before market open. And again, estimated move there of 3%. Okay, continuing on through our quiet list here. Believe it or not, Cisco is on our list here. They will declare Wednesday, February 11th, after market close. The average move here is less than 5%, or right around 5%. Again, it could move up 4%. It could move up 6%. As long as it's right around that number, that's where option market makers are pricing these options out. And again, if I could go, get some decent premium, 10% or more out of the money above or below the stock, that's where I would want to be. And then hedge that with wider options that I buy, further out of the money to create that Iron Condor. All right. Now, another one here is American Electric Power. Okay, AEP. This is a $120 stock. Another nice candidate here. They will declare Thursday, February 12th, before market open. A lot of stocks declaring before market open right now. The average move here is about 3%. Okay, AEP does gap around a little bit, but I was just going to pull up on another chart just to confirm what that last move was. That last move here, this was a 6% move. Okay. And I wanted to include this as an example of why you want to go so far out of the money above and below in case you have a move that is bigger than the anticipated move. Okay. When I say average move, this is the average expected move. In other words, where the market makers are usually pricing these options out. I calculate that on every stock that we look at before we talk about them. And right now it's coming in around 3%, a little over 3% on American Electric Power. Airbnb is also going to declare on Thursday. This will be aftermarket close on Thursday, February 12th. The average move here is 4%. And you can see the last earnings back in November here, just not very much movement, a little bit of volatility, but not much. And again, we're not concerned with the overall movement of the stock because we like doing this with very short time to expiration, okay? Because we can do that because of the Russian implied volatility, all right? And then option expiration is usually the next options earning cycle is where we like to put that, all right? Now, TC Energy, TRP is the symbol here. They will declare Friday morning, February 13th. The average move for here is just 3%. Okay. 3% for TC Energy. This is TransCanada, I believe, used to be the name. I believe. Okay. This is $60 stock. Possibly some good good opportunities there. But again, you always want to price out a couple days before the event, see where we are on that. Okay. And then finally, I believe our last candidate here for Friday is going to be Kenko. They will declare Friday morning, February 13th, before market open. And the average move here is about 5%. Okay. You can see the last earnings event was actually here. A lot of people might think it was here on this gap. That wasn't. It came in right here on November 5th. That was the earnings event, and we can expect a move of about 5%. So $118, $120 stock, usually some pretty good opportunities there for a stock like this. If you can get, unless the option cycles are like, oh, the next expiration is 21 days away, or that's a little long. Okay. I like to have it in that, 10 day window or so. All right. So that's it for the quiet stocks. And so that's some good examples there of how little these stocks typically move through earnings, but not all stocks do that. Okay. And if you like this content and like how we deliver this content, please like and subscribe because we go through these each and every week. And I also have some trades for you. I have last week's trade that we gave out. I will update you on that. And also a new trade for you for this week. So you want to hang on as I got some good info for you coming up on these potential breakout stocks. Now, remember, these are the stocks where the estimated moves are greater than 10%. All right. So breakout candidates. Let me give you an example. All right. Now, Akamai, they have earnings next week. Okay. A week from Thursday is their earnings. But I do like to show this as an example because this stock is a gapper. This thing will move, bounce around. Great stock to trade a straddle or strangle. Yes, option pricing is a little bit more, it gets expensive. Okay. But on a straddle or strangle, once you go in the money and you have intrinsic value on those options, the implied volatility goes, it doesn't matter because you have real value. And that's how we make money on these trades is for either that call or that put to go in the money and go deep in the money. And that's how we make money on these trades that pop big. Let's give you a quick example here. All right. Now, earlier today, actually, we had Cleveland Cliffs declaring earnings, and my little box disappeared. But the estimated move here was actually about 18% for Cleveland Cliffs. And look at this, it dropped 17%. So it was just shy of that estimated move. And this is what you got to watch out for, because if the estimated move is 18%, that means you need your options to be able to make money on, say, a move of 10 or 11%, and then it moves. If they're pricing in an 18% move and the stock only moves 17%, that's the potential for a losing trade. It just didn't move enough. So yes, even a move of 17% might seem like it's an automatic winner, but oftentimes it's not, because option market makers are already pricing in that move, and you got to be careful. Okay. So let's look at another stock that declared today, and that's Monday.com. They declared this morning. The average move here, here's a great example. The average move here is 25%. But look at this. The stock only moved 21%, actually just under 22%. So you would be close to break even on your straddle or strangle on this, even after a 21% move, unless you were able to get a straddle or strangle that was where your break evens were maybe 15% out of the money. Okay. In that case, this move would have been profitable. If I could have gotten pricing where my straddle or strangle only required a 14 or 15% move for the stock, and then the stock moves 22%, boom, that is where these things make money. And that's why they're so exciting, because they move fast. All right. So you'll notice here that a lot of our stocks are a little lower priced, and that is for a reason. If I can get these lesser expensive stocks, usually under $100, that keeps our debit low. Because trust me, there's $300 stocks that will move double digits, but the straddle or strangle are thousands of dollars. Okay, and I'm basing everything on a $10,000 trading account. Why? To be as inclusive as we can for traders that have smaller accounts. So I don't want that debit to be over $500, and I like to be exclusive. So I'll highlight these cheaper stocks, because we can usually get a straddle or strangle priced around that $500 or less number. So we're just not risking a lot of our portfolio. So Upstart Holdings, they will declare Tuesday, February 10th, after market close, and the average move here is 18%. You can see this stock gapped down. It did rally off the lows after it gapped down on the last earnings, but the very next day, boom, down it goes. It'll have a little downward follow through, but not much. Okay. But this stock is notable because it will drop. I mean, it will pop or drop pretty hard, and usually move double digits around those earnings event, which is what we like. So you'll definitely want to watch Upstart, as well as our next candidate here, Lyft. Now, Lyft is interesting. It is a $16 stock. They will declare earnings on Tuesday, February 10th, after market close. The average move here is 13%. Now, I just priced this out before our session today, and right now, options, at the time of this recording, options were pricing out to require a move of about 15 to 16%. Well, if the average move is around 13, that means it's not going to move enough for that straddle or strangle to be profitable. So that is what we have to watch out for. Okay. So, interesting one here. All right. For those of you that have been trading for a while, you know what has happened here. All right. For those of you that are newer, you might not. And anytime a chart looks like this, it's a buyout. Okay. So yes, it was a candidate. This stock, okay, on Confluent, used to move double digits around earnings, but they are being acquired. And here's the thing, a quick little lesson here. My guess is that they're being acquired at $31 a share. Why? Because the stock gapped up, and it gapped up to about $29.85. And you might ask, well, why didn't it just gap up to $31? The difference between where it gaps up and the final buyout price is what we call the risk premium. So they were pricing in the potential for the buyout to fail. This particular buyout required regulatory approval from multiple countries. So there's a chance that this could fail. If you're quick, you could sell the 31 strike calls for a nice premium. Believe it, I priced them out today. The bid-ask spread is for the 31 calls that expire in about a week. They're between 5 and 15 cents. Okay, so or 5 and I think The mid price was 8 cents. That's all you're getting is $8 to sell the calls, which if you do enough of them, not a bad, not a bad return. But again, that's for the brave because you never know what's going to happen with these buyouts. IBM is acquiring Confluent, and they just overcame some European regulatory issues or concerns about this trade. And anyway, that's it. So we will be taking this stock off our list because they will be absorbed by IBM. And again, that's a stock that's now off our list, and we won't have that opportunity to trade Confluent anymore, even though it was a big mover. I mean, it usually gapped around a little bit. Look at this. Okay. I mean, going from it closed one day at 26.42, opened up the next day at 18.21. Now, for a $28 stock, that is a big move, and that would be typical of a stock like this. Okay. On these big movers. Okay, so let's continue on through our list. We just have a little handful left here to go through before I get to the trades. We have Unity Software. Now, I like this one because they will declare Wednesday, February 11th before market open. The average move here is 16%. Software stocks have been getting killed. There's a lot of volatility in software right now. So definitely one to watch. And with it having the potential of moving double digits, it is a good straddle or strangle candidate if you can get the pricing right. Okay. Continuing on with our list, we have Cognex. Again, a stock that I'm not really even familiar with. I just know that this thing is a mover, and that's all I care about. I don't care what they make. I don't care what their sector is, although that does come into play a little bit. You'll rarely see a utility stock here, maybe one or two, but that utility stocks usually don't move double digits. But anyway, Cognex will declare Wednesday, February 11th after market close. The average move here is 16%. $43 stock, right in our wheelhouse. All right. Then a well-known stock, Crocs. Okay. Yes. And I love this consolidation pattern that we're seeing here on Crocs. All right. They will declare Thursday, February 12th before market open. The average move here is 18%. Now, the last earnings cycle, this is what we call a whipsaw. This is a big intraday move. The problem is it gapped higher, sold off, closed lower. If it had moved one single direction with all that intraday volatility, okay, that's what we like. Okay. It can gap higher and then close even higher. But in this is what we don't want to see is when we have this whipsaw action. Not a good look, but man, I do like how we are coming into some consolidation here. Okay, we're coming into a little bit of a wedge coming into the earnings event, that little consolidation here of price, and this usually leads to a potential breakout. Now, this is not a guarantee, but it's definitely putting the odds of success on our side, and that's all we're looking for is increasing the odds in our trade, odds of success in our trade. So Crocs will declare Thursday, February 12th before market open. Again, the average move here is about 18%. And again, that's average expected move. Just too much text to put in those little boxes. All right. Now, Pinterest, we do have an open trade on Pinterest. I'll talk about that in a minute. We put that on last week. We'll update you. The stock has dropped here. And they will have earnings on Thursday, February 12th, after market close. And the average expected move here is of 18%. So since this is an open trade, you'll want to hang around for just a few more minutes because I'm going to talk about what our trade plan is because it's a little different now. And I'll tell you why when we get to that trade. So hang around. Two more stocks to go. We have Dutch Brothers Coffee. Who knew? Okay. But because of tariffs, cocoa prices, there's kind of a wild thing going on in cocoa, not as much as in copper or gold or silver, but still definitely some movement there. Dutch Brothers will declare on Thursday, February 12th after market close. The average move here is 17%. Now you'll notice, look at this last earnings, it barely moved. Okay. And that'll happen one time out of four or one time out of five. I mean, it goes through these cycles where it might not move. You can see the last, prior to that, these earnings back in August of last year, nice little gap here, double digit gap higher. Okay. For Dutch Brothers. Okay. But they will, stocks will have these consolidating moves every now and then. But here, because again of some economic changes in their business, they might have some volatility. Definitely one to watch for later this week. And finally, Friday morning, we have Advanced Auto Parts. They will declare Friday, February 13th, before market open. The average move here is 17%. Okay. And it does show some volatility. Here's one of those whipsaw moves. It did have some downside follow through on their last earnings event, but Dutch Brothers has, um, a little bit of a history of gapping around, and every now and then you'll catch that winner. That's the thing. It might gap in reverse, but we are watching their option market makers. It's not us. Option market makers are pricing in the estimated move for these, and right now they're pricing in about a 17% move for Dutch Brothers. In fact, or excuse me, Advanced Auto Parts. In fact, I looked for that as an opportunity, and before our show, and they were pricing in about an 18% move for this. Okay. The average expected move is 17%. They're pricing in an 18% move, which could indicate possible more volatility, but hey, they could get it wrong too. Okay. They can get it wrong too. All right. So let's take it on our list one more time. Again, there's definitely stocks out there that are well known that are not on our list. Why? Because they have average moves around 9%, 10%. And when we get those, there's stocks that are quieter than that, and there's stocks that are more volatile than that. So we take the quietest stocks and the most volatile stocks, and we try to consolidate them on this list for our show each and every Monday right here on Earnings Call. All right. So with that, let's get to our current trade, and then I have a new trade for you, and then we'll call it a day. Okay. So last week, we issued a trade on Pinterest. All right. And this was a straddle. All right. And the goal here was to take advantage of a rush higher in implied volatility combined with a possible move in the stock. Well, both have happened. Okay. If the stock kept going sideways and we had a rush in implied volatility, that's really the best possible outcome, because you can make double-digit returns prior to the earnings announcement just by the stock doing nothing because options got more expensive. Well, let's look at the results. This options did get more expensive. Okay. Implied volatility has gone up, but Pinterest also dropped a little bit. With that, we have currently an 11% return on our risk in just 7 days. Okay. Imagine that. Imagine earning 11% a week on your money. Okay. Everybody would just jump for that. Okay. 11% return a week, would love it. That's what's happened here. So conservative investors could probably take this off. What I'm planning on doing is waiting a day or two here, seeing where implied volatility goes, maybe a little bit more drop on Pinterest. Maybe we can take a 15 or 18% move and then reapply the straddle if pricing allows us to right before the move, right before earnings that happen later this week. Now, remember, Pinterest will declare on Thursday after market close. So we have a couple of days to do this. Now, our subscribers will get an update of what we're doing with the trade. Right now, for those of you watching, you'll just have to watch or make your own decisions on how to manage the trade. Okay. But right now, there's a double digit return on this, even though it's only $37. That's per straddle that we did. If you did 10 straddles, that's $370. Okay. If you did 100, it's $3,700. So pretty simple math there on these trades. Okay. So right now this is a hold for a day or two, and then we'll exit out and then probably reset it probably right before the earnings event later this week. But I'll let you know next week. By the way, before I forget and before I give you the new trade, next Monday, the 16th of February, is a market holiday. Okay, so important note here. Next Monday is a market holiday. We will have our show probably on Tuesday. Okay, probably on Tuesday. We'll take a look at the list of earnings, and if you don't see us next Tuesday, don't panic. We'll be back the following week. Don't worry. Okay. Um, if there's some good potential for next week, we will definitely do the show on Tuesday. So watch out for that. But it's a market. Enjoy the 3-day weekend coming up here this upcoming weekend. Okay. All right. So let's get to our trade of the week. All right. And believe it or not, the trade of the week is going to be on a stock that did not make our list. But guess what? It still has a great opportunity on it. Our trade for the week is on a company called Vertiv Holdings. Okay. VRT is the symbol here. This stock has an estimated move of about 8%. Okay. 8% move. Our break evens, and you can do the math here, where the stock is currently trading. That's the dark blue line that's kind of dissecting the risk graph on the right there. Where the upper break even is, that's the light blue line that goes from left to right. And then the lower break even is that light blue line that goes left to right. If you do the math there, downward side break even, I believe, is around 13% out of the money, and the top side break even is about 14% out of the money. Stock only has an 8% expected move. That's how you make money on selling premium onto stocks that move even 8%. You can sell the premium wider, but notice we're not naked here. We bought options even further out of the money to save us on margin, expenses, and to make sure we were covered in case the stock really breaks out. So Vertiv Holdings is our trade of the week. It is an Iron Condor, and you'll want to come back and see how we did on this on our next show. So everyone have a great trading week. Continue your education. Knowledge is your best asset here. Continue to trade. It's all about the numbers. The more repetitions that you do, the more consistent results you get. So everyone have a great trading week. Enjoy the holiday next Monday, and we will see you again soon. Everybody take care. Have a great week.